The story I'm going to share today starts with traditional banks. Now, Cathie Wood agrees that traditional banks have some problems that if they don't address immediately, they are going to lag behind some of these other companies we are going to talk about in this video. Some of these problems include failing to adapt with technology, being slower than others, and the high costs of acquiring customers and upkeep of traditional banks. So if traditional banks are going to fail and fall behind, what is the alternative? Well, that would be what I would consider a new era of banking, and that is just going to be digital wallets and things like that on your cell phone. Companies like Square and PayPal, who own Cash App and Venmo respectively, are going to be the recipients of the success in this sector. These so-called digital wallets have the potential to disrupt traditional banking as we know it. So that's exactly what we're going to talk about in this video. We're going to talk about the traditional banks and why they are going to be failing in the long run and why these digital wallets are going to replace them. Now, we saw in 2008 that traditional banks are very, very hard to defeat. So I don't know if we're going to see traditional banks be completely ousted, but I do think that digital wallets are going to become more and more prevalent. And so, like I said, Cathie Wood of ARK Invest agrees. In one of her big ideas conferences of 2021, she did talk about this and touch on this for a few minutes, so I am going to play those clips in just a little bit. And then after I play those clips by Cathie Wood, I'm going to break everything down a little bit clearer just so you have a better understanding of what's going on. So in this video, we're going to talk about the 3 reasons that digital wallets are going to take over traditional banks. The first 2 reasons are going to be more immediate threats to traditional banks, and then the last reason is going to be a longer-term outlook for digital wallets that I think have a great opportunity to disrupt traditional banks. So if you want to see that, be sure to stick around till the end.
Digital wallets, these are the new bank branches in our pockets or in our handbags. And we believe they're going to scale. They're in the process of scaling now. Here in the United States, it's Cash App and Venmo primarily. Of course, we've seen WeChat Pay, and Alipay scale in China. So we were a little more developed and had good financial rails, which China did not. So they led the charge into this space. Again, the coronavirus has turbocharged it. The reason this is happening is not just because we're dealing with contactless payments. So, we don't have to worry about the virus with digital wallets, whereas we do with credit cards and debit cards. I think they actually are more virulent in terms of spreading the virus than cash itself. So digital wallets have gotten a booster here. And their cost of customer acquisition is a fraction of that of traditional banks. $20 versus anywhere from $150 to $1,500. And the reason banks were willing to pay so much is their customers were so loyal. Well, we think that's about to change and that banks are in trouble. And we think that the valuation of these digital wallets is going to scale enormously during the next 5 to 10 years. So today, you can see here on this chart, Venmo and Cash App are valued in the marketplace at roughly between $250 and $700 per user. And we see that we believe if they capture the share of banking business, brokerage business, insurance, we see that they could scale to nearly $20,000 per customer. Now, what we've included in this big ideas that we did not last year was 10,000 of that, roughly, will come from e-commerce. If you study WeChat Pay, you'll see that half of the time spent on WeChat Pay is in payments and then half in e-commerce. So again, another big opportunity that we really hadn't taken into enough account last year when we did big ideas.
Before I break those down in a little bit more detail, I do just want to briefly mention, if you are enjoying the video or you're finding any value in this, please consider hitting that like button. And then of course, hit the subscribe button if you never want to miss another video like this. And that's going to bring us into the first reason why traditional banks are starting to falter and why digital wallets can take them over. And that is going to be the cost of upkeep of traditional banks versus digital wallets. And then we're also going to get into the cost of getting customers for traditional banks versus digital wallets as well. So as far as traditional banks go, what do you think of when you think of a bank? You think of the big buildings in the big cities, And then as you go further and further away from the city, you see the small branches. Well, those are very, very expensive to upkeep. Especially the big banks and big cities are very, very expensive, so they have to gouge you with every single fee and charge that they can in order to upkeep those businesses. However, banks make most of their money on lines of credit outstanding. These fees can add up and help pay for the maintenance of the banks. As far as digital wallets go, they simply do not have these fees. They don't have huge buildings, they don't have branch campuses. Like I said earlier, they have much cheaper overhead. Everything is done right on your smartphone, and it makes it super simple for the customer as well. That also brings us into what digital wallets can provide for their customers versus what big banks can offer their customers. I don't know if you've ever been through the process of opening up a bank account, but it's just not that simple. You have to go there, fill out a bunch of paperwork, probably wait a few days, and then you have to actually go to the bank to deposit your money and take out your money. It's just not a great process. However, with digital wallets, you simply just download the app, sign up, and you're ready to go. Now, I know currently these digital wallets oftentimes use traditional banking methods to get the money there and back, but I think that's something we can look at in the future and see start to fade away. And then finally, let's talk about what it costs to get a customer to a traditional bank versus a digital wallet. Well, first of all, it's much easier to scale for a digital wallet, as it simply just goes by app downloads and point of sale products that they sell to merchants. They don't have to gouge every single customer a ton of money just to upkeep their businesses. So for digital wallets, this means there's a lot less fees than traditional banking methods. And I think for companies like Square and PayPal, this can end up in a much greater profit. And that's going to bring us into the second reason why digital wallets are the future. And that's going to be ease of use and new ways to transact on these digital wallet apps. If you've ever used Venmo or Cash App, you probably realize that it's much easier than going to a bank, taking out your debit card, putting in your PIN number, taking the money out, driving back to your friend's house, giving them a $20 bill, and then driving back to the bank some other day just to put the cash back in. Instead, you can simply just Venmo him. It takes 2 minutes. You click his name, put 20 bucks in there, you send it to him, and everything's ready to roll. In most sectors of life, technology is moving towards making it less of a hassle to do things. That's what technology is all about, and that's no different with these digital wallet apps. Currently, traditional banks can't offer the same type of service. And then digital wallets can actually offer some different services that traditional banks simply cannot. Some things like crypto trading, using AI to assess your credit, easier payments, and you can pair with investing platforms such as Robinhood or Webull and make things a lot simpler. And I think with the rise in crypto trading and mobile investing, things like that, we're only going to see digital wallets become more and more prevalent. And that's just another advantage that mobile banking will eventually have over traditional banking. And that's going to bring us on to our last reason. With digital wallets, they can use things like AI to predict consumer habits to better tailor the app towards that particular customer. Now, this is where digital wallets can cross over with some other disruptive industries, as ARK Invest Cathie would talk about. For example, a digital wallet could use AI to suggest companies that you might like shopping from, or give you discounts based on where you shop. Think of the future of digital wallets as something like a Netflix, where you're scrolling through and seeing different things that are tailored directly to you as a customer. And they can use things like your buying history or your location to suggest new things to you. They could also suggest things like crypto buying opportunities or investing opportunities, wealth management opportunities. The possibilities really are endless when it comes to AI and digital wallets. Currently, traditional banking does not have the capabilities of tailoring their investing and saving strategies towards their specific customers. With traditional banking, it's much more of a one-size-fits-all approach. And I think if traditional banks are too slow or just simply do not use these strategies, I think they are definitely going to fall behind digital wallets. There's a reason that companies that use AI and these disruptive technologies, they're seeing success when the traditional older style companies who don't use these strategies simply just don't see the same growth. With that being said, I think that digital wallets have a long way to go. I think they need more regulation, things like that, before they start to see wide accepted use. But that is something to look forward to in the future. I think as there is more and more data on these companies, I think that the government can regulate this in a way that everybody can use it, and it will become much more safe and simpler than traditional banking. With that being said, traditional banks are proven to be hard to defeat, but I think if they don't adopt some of the strategies that companies like Square and PayPal are with Venmo and Cash App, that they simply will not be able to catch up in the end. As always, let me know what you think about this topic down below in the comments. I'm super excited to talk about it, and I would love to start a conversation down there. As always, if you did enjoy the video, please consider hitting that like button. It would help the channel grow tremendously. And of course, hit that subscribe button if you never want to miss another video like this. Other than that, my name's Christian Gardner. Thank you so much for watching, and I will see you guys in the next video.